All right, we have a pretty good group going, so we'll get started. I want to welcome everybody to the show today, and I hope that everybody's kind of staying warm. And the advantage of webinars is that you don't have to go outside for them. Kind of nice advantage these days. So the show is really about, hey, let's talk about various topics, financial topics, and let's do it in plain language where people understand. And really the goal is to help people, hopefully, people walk away from it a little smarter, right? From it. Um, so today the show is really on commodities, and we're going to talk about recession, inflation, various things like that that's been going on all over the place. And my guest today is Commodities Portfolio Manager David Derwin. So, hey, Dave, thanks for coming on. So,
Hi, Ray. Great to be here, and it's always good to talk and discuss markets with you.
yeah, no, it's funny. We met, our kids were playing basketball together, and, it's funny that we just create conversation, and here we are, like, what, 8 years later, we're
Yeah,
doing a presentation together. So,
yeah, we've known
uh,
each other a while.
yeah, I go, time flies kind of thing. So I refer clients to Dave, and why he's on the show is because he's had positive impacts with people that he's worked with, and really want to hear his comments on what's going on these days. Um, so let's just so one of the things that's important in my business, I don't know about you, Dave, but is really creating long-term type of relationships, right? Because everything we do is really long-term, and I really was always interested in creating a long-term relationship, because really money's forever kind of thing. So if you have a good team helping you manage those things, small decisions that you make now can make a big difference later. And I know that I can't do it all. And so I think it's critical that to bring true value to clients is to find people that can do the job right. Because I'm more of a generalist quarterback where I can get to know my clients, and I go, oh, you know what, maybe you should want to, you're a farmer, you're buying and selling grain all the time. 20 cents might make a huge difference in your life. Maybe you want to know more about that, and you should talk to a guy like David, right? And then I kind of, ship them off to you. So what do you talk to them about when I you know, when you start talking to them?
Yeah, well, my background has been, oh gosh, probably almost 25, 30 years now. I've been working with farm businesses, helping them manage their risks, capture opportunities in the markets, and use marketing tools that they may not necessarily have access to or may not be very comfortable with or understand. But the bigger picture is to help them sort of broaden their marketing toolbox. And there's always elements of dealing directly with the grain companies. You've got your forward contracts and your deferred delivery contracts. Some people who start to use basis contracts as well. And the one area that I find over and over is how do they get more familiar with and comfortable with using options, using futures, some tools that can be extremely important to help round out that sort of whole marketing puzzle, if you will. And it's one component, just like Ray said, in terms of focusing on your area where you look at on the investment side, on the insurance side, on the planning side, taxes. When I'm working with farm businesses, it's coming at it from the farm business operation side and how these financial tools can work in conjunction with everything else that they're doing to just fine tune, earn an extra 5% here, 10% there, and just use all the tools that are available to them. So it's really about getting to understand what they grow, type of farming operation they have, what their level of understanding is, and on the marketing side, how to help them fine tune it and kind of take it to the next level, really, by using some of the tools that are already out there.
Yeah. And do people do they get kind of intimidated by all these futures and options and various things? And they go, okay, well, you know what, Dave, you deal with it. I just, I just like hearing you talk. Like how do people react to, you know, because sometimes people have to get out of their comfort zone a little bit, right?
Yeah, absolutely. And that's a big part of it. And let's face it, I mean, options and futures are something that are a little bit more different, unique. I mean, they've been around for centuries, really, but getting comfortable with it is a big part of that process. And I find that are they intimidated by it? Yes, but anyone would be if they don't, until they start to learn it and how they can use it and what the benefits are to them. And yeah, they're often looking to me to help them in that process, right? Just like people look to you to help them guide them on the financial side and the investment side, they look to me to say, okay, how can we fine tune this? And I've had anywhere from people that are completely brand new. To these tools, all the way to people who've been using them for years. And I think the common thread in that, and I myself included, I've been doing this for decades, but you still learn something every day or at least every week. So it's a matter of working with them, bringing them up to speed so that they're comfortable enough to use these tools. And they do rely on me certainly for the guidance and the advice, but it's an education process and an engagement process. Really, the more that they get involved with it, the more they're involved with, their money, with their decisions, with their marketing decisions, the better it's going to be. So the more people get involved, the more they learn from it and get out of it too. And I
hear
try
you.
and facilitate that process.
Yeah. Well, I kind of say these things. I've been in this business quite a while too, and sometimes you think you become a genius because you figured something new out, and then that lasts for about 10 minutes until you figure out that you haven't figured anything else out.
Yeah.
So there's nothing really new ever anymore. Like everybody's kind of figured everything out. I mean, there's different tools and different type of things that you get in. People like there's nothing really new, and maybe you want to comment on that, and tell me I'm wrong about that, but the fundamentals of investing, if it's mutual funds, if it's equities, grain, oil, or whatever it is, it all has the same, they all kind of work the same, right? Like it's there's highs, there's lows, there's that kind of stuff. And do you ever find that clients, you know, uh, find that, maybe you have a magic wand, and you can,
Yeah, and you're right. There isn't anything new out there, but what I always find can be new and novel is just, your thinking, your approach to it, and being innovative in how those tools can be used. And, you know, uh, everyone, you're right. Some days you can be spot on these markets and your strategies and your approach, and then other days clients will ask, so, you know, um, what do you know today? And sometimes the answer can be as simple as, well, a little more than yesterday and a little bit less than what I'll know tomorrow. But it's the fact that you're not going to be right all the time. And I think what's important about that, especially when it comes to looking at marketing grain, right? You've never no one ever sells at the wrong price, right? They just sell either too little or too much.
yeah,
So a lot of these tools are really structured, and I put together strategies that help you, put in place some downside protection so you still have your upside, maybe so you can sleep a little bit better at night. So you can still be a little bit wrong, but it's not going to cost the farm, so to speak. So it's never no one knows what the future is going to hold, but I think these tools really help you manage it and kind of create some of your own future as it relates to the grain marketing and I mean cattle and hogs as well, for that, if there's people listening that are also involved on the livestock side. But it's how do you use these tools to just balance some of that process out a little bit so it doesn't have to be an all or nothing kind of decision.
yeah, I hear you loud and clear. So yeah, so I always, so we talk a lot of different things, right? And very different sides of financial planning. And I really want to kind of say that, when everybody who's organizing their wealth, you have to put together a good financial team, and it's not much different than putting it together a good hockey team kind of thing, right? And you know, so you have all these various things that can be really overwhelming for you as a farmer or a business person, and if you don't have that financial team to help you manage all that, it's easier to make mistakes, right?
Yeah.
Mm.
Yeah, and it can be very overwhelming, especially a new topic like this. So,
Mhm.
and throughout the session here today, I know Ray, you were mentioning it to me too. That if anyone has questions, then certainly feel free. There's some
Yeah.
icons there and some toggles that allow you to answer questions, and I'm happy to answer them as we go, because if it's something on your mind, chances are someone else is thinking it too. And some of these topics can be um, a little bit more involved. So it's good to answer questions and kind of
Yeah.
let us know what might be on your mind.
Yeah. There's a Q&A thing, everyone, on top that you just click and you ask your questions. And I think you even just put it in the chat and or raise your hand. There's the various options there. So, and we always want to talk about what people really want to hear about, right? Um, so let's move on here. I always like quotes. And, I know this is one of your more favorite quotes, David. For farmers is the only man in our economy who has to buy everything at retail, sell everything at wholesale, and pay freight both ways. John F. Kennedy, right? So, and he was, this quote comes from a speech that he did before he got elected in, I think it's 1961. And when you sent me over this quote, I was like, wow, what a great quote, right? Kind of explains things well. So, um, but
Yeah.
why do you like this specific quote?
Well, I like this one because, I mean, talking to farmers on a daily basis, you realize just how true it is. But the other side of it too is it always seems to be a David versus Goliath kind of situation where, you're buying all of your inputs from your seed and your fertilizer and your chemicals from these really large, massive companies, right? They could be Canadian, they could be American, they can be global, European. So, certainly the pricing power, we know where the pricing power would lie. And then at the other end of the spectrum, when it comes time to selling the grain, you're selling this grain to very, very large um, food processing companies or elevator companies that are shipping it around the world. And again, their buying power is tremendous. So the quote there about, buying everything at retail and selling everything at wholesale is really reminiscent of that David versus Goliath scenario where it can be very challenging because there's some very large companies and the contracts are, there's can be a lot of particular clauses in there that may not always be in your favor. So that's where I like this quote because it sets the groundwork for, all the more reason why you want to be looking at all the marketing tools that are available, because those big companies use it to manage their risk, pardon me, and hedge their opportunities and capture market opportunities. So, why not the farm business, right? Without the farm business growing it, there's it's an important piece of the puzzle. So having all the tools that you available to properly manage that, I think, is key to try and level that playing field a little bit. I mean, it's always going to be a David versus Goliath, but I mean, we know at the end of the David versus Goliath story who won. So it's that idea there of, look, we can still do a lot to try and improve the situation and be a little bit more sophisticated and a little bit more open to new ideas that are out there.
Oh, I hear you. It's definitely it seems like that in every industry is it's like always a David and Goliath thing, but
Yeah.
that's the world we live in these days, right? So um, now I put down here at that time that farmers were having a difficult time. I mean, nowadays that difficulty is I would imagine different than it was back then, you know.
Yeah, and now you see some of these, and I'll deal with other non-farm businesses as well. But you start to realize that some of these farms out there, like the size of land that they're managing is massive. Their revenues are huge. The number of people they got working for them, and in many cases, it can rival or even far exceed some of the the manufacturing businesses that I'll deal with. but it's a very capital intensive business for sure. And with interest rates going up, commodity prices are really high. Land values, as we all know, have gone up, and they continue to go higher. So those are some pretty big expenses out there. And if people want to continue to expand, there's a lot of risk, right? There's a lot of risk, and to be able to manage those moving parts is important. Like, yeah, we've had some very good prices, and depending on which report you read, cash receipts are really strong and revenues are really good. But, you talk to people on a regular basis, and yes, grain prices are high, but so are fertilizer prices. And of course, diesel and input costs, and then the cost of machinery coming from the States, and, on and on and on and on. So yeah, prices are good, but a lot of the inputs and the costs are pretty high as well. So
they always seem to follow each other, I guess. Eh? I wonder how that is.
Yeah, that's right. And you'll have different people answering with different degrees of skepticism on that. But they certainly do move together, and maybe that's part of this whole, this rise in commodity prices that we've seen, and where it's going to go is an important part. Because yeah, fertilizer prices have started to come down, and unfortunately, we're seeing some of those grain prices follow that path as well. So it's they do go together.
Mm, mm. Okay, so let's get into it. I mean, it's definitely, been an interesting past year. We'll see. I think, I think we were kind of at our desk around this time last year when the war hit.
That's right.
It seems like it was a long time ago, but it's just like a year ago. And that changed the scope of things a little bit, I would imagine, and probably helped inflate or made inflation worse for us. But yeah, so when it comes to where we are today, and there's always lots to talk about, like recession, and a lot of times I see that as just another way to, the Bank of Canada might advertise recession to help, inflation, right, and that sort of thing, right? So I'm not myself personally too worried about a recession these days. But I don't know. I mean, there's always a lot of news about recession. So what are your thoughts on where we're going to head this year?
Well, we've been talking about recession for a while. So just because everyone's talking about it always makes, if everyone's talking white, maybe it's going to be black kind of thing, or at least if not black, maybe gray. So it's certainly been an issue that has come up. And I don't know, I think just the fact that it's getting so much news maybe means it's no longer news anymore. So the impact could, especially when you look at from the investment point of view. I mean, the stock market dropped last year. We know that. And that was probably pricing in some of that recessionary fears. And now that if and when those recession numbers actually come to fruition, maybe it won't be that much of a surprise anymore. And then on the inflation that you have set up there, especially as it relates to the farm commodities. I mean, there were three very unique, separate events that caused prices to be where we're at today. First, of course, we had COVID and the food hoarding and all the concerns with the supply shortage there. Okay, then we had a drought in 2021. And then we had the Russian invasion this time last year, as you point out, Ray. So those are three fairly significant events that caused prices to push up to some pretty high levels in June of last year, and in many
Historical
cases,
high, right? I mean, like it was like a lot higher than any historical highs, wasn't it? Like
absolutely, yeah. Like look at the typical example of canola trading at 1,200 a ton. Those are some pretty dramatic prices. We're now about 800 or so, but those were three events that, on their own they could have combined, or they could have caused some of these price moves, but combined it was really a perfect situation. So are we going to have something like that that's going to cause these prices to continue? We need at least one or maybe two similar events of that magnitude to cause prices to go back up. So your question on inflation is that's been getting a lot of news lately as well, but that one could be perhaps a little bit stickier.
We're
Not
getting
sure yet.
numbers now from, of course, it's only about a couple of months ago, 2 months, 3 months ago, that inflation, especially in Canada, seems to be, I would say, dare say, under control, or am I jumping the gun on that?
Yeah, well, I mean, whether it's someone's got it under control or just that it's subsiding, right? Because I mean, I don't like to give too much credit to governments and central banks because I think there's a natural flow of things. But one thing that I do track on the inflation front, I always certainly the commodity markets and the broad indices are important. But one of the sectors that got a tremendous amount of focus when these prices were going up were used cars, right? There was a time we all remember when you
Mhm.
could
Okay.
you'd buy a used car at a higher price than new simply because you could drive it off the lot today instead of 3 or 6 months. And now there's a really good index in the States that I follow. It's the Manheim used car index, and that's kind of been drifting lower and dropping. So some
Mhm.
of the less public kind of indicators of inflation are, like you say, right? Maybe it is starting to get under control a little bit. I wouldn't want to say that that's the case for sure, but certainly there are indications that things are coming down. Look at oil prices too, right? We went from what 50 to 120, and now we're at about what 75.
Mhm.
So that's come down a long way. It's still high, but everything's just kind of drifting lower, and gravity's pulling a lot of these prices back down
Well,
for
that's very
now.
interesting. Yeah, well, I like the used car index. That's the first time I hear about it, actually, and to me, it makes sense immediately on how that index could be actually a really good index to kind of track those kind of things. Because it's funny. I tell people that these days I'm telling them to start buying because it's a good time to start buying into markets and into equities and even to bonds these days, right?
Right.
And so you're trying to encourage people to start buying, and their faces kind of change colors, and they kind of look at me as if I'm crazy, right? Because of what happened last year.
Yeah.
And I go, okay, your faces kind of tell me it's a good time to buy because you look the most scared I've ever seen you when you're talking about investments. So, it's just to me, there's a differently as psychology behind all these kind of things as well. But
Yeah.
it's definitely like you mentioned, that there's been a ton of things that have changed, right? So one of the things that we've been watching lots, of course, is interest rates. And I'm kind of these days telling people, well, if you're interested in buying, um, a safe investment like a GIC or something that's kind of more guaranteed, don't do it. Like buy a bond instead, because bonds are really, the outlook on bonds are excellent. I mean, it's not even talking double digits this year, which is kind of unheard of on the bond side. So, and they say if you lower interest rates, later this year, that would even catapult that further. Are you thinking the same thing, or are you hearing the same things about that side of the business?
Yeah, and I think back a couple of years ago, there was a lot of conversations I was having with farm clients as it related to their borrowing costs. Right, I've got a lot of fixed rates. What should we be doing with it? And of course, when interest rates are near zero, well, there's only one place they can go is up. Doesn't mean they had to go up this quickly. I think that surprised everyone, but certainly when rates were that low, it made sense to convert your or hedge. You could always hedge your interest rates too with futures, but at least converting your floating rates into fixed rates. And now that we've come to the other end of that spectrum, where if T bills were close to zero, and now they're maybe at least the maybe about 4.5%. Some are pushing 5%. It's a different. It's definitely a different conversation, right? That was a good time, obviously, to lock in rates when they were low. Now that we've gone up so much, I, I would tend to agree with you. Right now is the time to be looking at investments because some of these rates have gone up a lot more, right? And you can buy something 5, 6, 7%, whatever it might be. Well, are we going to go up another 5% from here? I mean, never say never when it comes to the markets, but we've had a pretty big move already, so things have gotten cheap, definitely.
Yeah, yeah. So we have a question here, and it has to do with the interest rates, and it's when will interest rates slow? When will interest rates slow the increase of farmland values or even lower them? Historical land values don't drop South Central Manitoba. kind of thing, right? Um,
Right.
yeah. Do you have a comment on that or?
Yeah, and again, that's a conversation that comes up almost, well, maybe not daily, but certainly weekly, in that, you know, land prices, especially for farmland, it's like the old saying goes, they're not making more land. Um, and there's a lot of buying still coming in. And you look around. I mean, you talk to people in Ontario, and they look at our land prices here, and they go, "Wow, your land is pretty cheap." And even though it's 5,000 an acre, or six, or seven, depending where, they might be used to 12, 13, 14. Same thing Alberta way, where land prices are, typically higher. Um, they look here, and there still is some good prices to be had, and a lot of that depends on what commodities do, like what wheat and corn and chickpeas and lentils and all those different products do. But there's some just general buying that comes in where if they've already got maybe, I don't know, 3,000 acres, and they want to add a couple more quarter sections on, then they're not going to be too price sensitive. They just want to buy it and expand, especially if it makes sense. You've got other buyers out there. You've got, like, a lot of the colonies and the Hutterite colonies tend to be buying land and expanding too. So to answer the question whether interest rates stops that or not, it might slow it down a little bit for sure, because it's more costly to do that. But that's a trend that has been in place for a while, and it's still trending. So I think it would have to be a combination of higher interest rates
Mhm.
as well as lower farm commodity prices to try and balance that out. And if rents don't go down, then hard for the farmland values to necessarily go down as well.
Well, I mean, farm costs, of land is just, I've been around for a long time, and my dad used to buy land at, 800 acre or $800 an acre, and it was expensive, right? And,
Yeah,
and then it really kind of stayed there for years, but then, things changed quite a bit. And, where do they end up? I really don't know, because I mean, it's like, I've heard of land in the States being worth 30, $40,000 an acre. And I'm like, that just, how does that make even any sense, right?
yeah,
Kind of thing,
yeah,
right? So,
absolutely.
uh,
And that's and then you want to take that discussion to the next level. You look at where people in Europe are faced with, and I remember
mhm,
talking to a fellow. He had land outside of Vienna in Austria, and now, granted, that's a major city, but I think his land, and probably because it was in the area of development, but 90,000 an acre. So it can continue to go higher, and then you also have a lot of investment funds and pension plans, and Canada Pension Plan, and different funds out there that are investing in farmland. So there is money that's being attracted to farmland as a good long-term investment. And if that keeps pushing it up, then um, that's another
well,
factor to keep in mind as
yeah.
well.
Where I go hunting, I notice this the most is there farmers are plowing down all the various bluffs and trees and
Mm,
trying to expand their land base in a different way, which I've been hunting that same area for years now,
okay.
and they never touched it, like all that, but the next generation of farmers are coming in, and the price of land had changed there dramatically as well. And we're seeing, farmers really try to open up more land, on that side. So it's very
Yeah.
interesting to see what's happening there. So,
Yeah.
um, my view on land is that it's always going to continue going up. I don't know if maybe the rate, definitely, I hope it changes, because it can't keep going at this rate. But as long as people are willing to pay for it, it's value of land is going to be there. So.
Yeah. Yeah.
Um, yeah. So, you know, so so you've been pretty busy over the last few years, I would imagine, with prices changing so much. Does that make your job busier?
It does, yes, because it just means it's that there's either opportunities that we want to make sure we capture if pricing is going higher, or likewise if things are dropping, then we want to make sure we protect that and hedge that. And when you mention about this time last year when the Russian invasion happened, that was an extremely busy time because markets were going up dramatically, and we were adjusting positions and taking advantage of those moves higher. So definitely when there's volatility, it allows for more opportunity and more movements to capture. So yeah, now the focus is too, like, where are we going? Because prices are historically high. Um, where's the next step? Where does it go after this? And as a farm business, your risk is always to the downside. And hey, we all want prices to go up and up and up, but no matter what we want, the market's going to do what's going to do. So we always have to have a very close eye on how do we protect that downside. And that makes for busy time as well, because look, prices are good now. And a lot of the questions I get now are about new crop, right? Prices are good. What should I be doing about it? Are they going to rally back up? Or are they going to continue their trend lower? So
Yeah. So
definitely.
let me put you
Busy
in the
time.
hot seat here. So you're a farmer now, right? You have your farmer's hat and you're going in. What are you seeding? Like what will be your main three crops?
Well, I think that'll always depend on just the different areas and the different regions. But I mean, canola still pencils out quite well, and it depends on their rotations too, and that can affect how they hedge these markets and market their grain as well. But I mean, you always see canola and wheat is always a big one, and then pockets here in Manitoba, especially, right, southern Manitoba, you got corn and soybeans and sunflowers and a lot of different ones, but they're all connected, right? So whether it's lentils and peas.
I've been
Um,
hearing about peas more now. My dad seeded peas when I was a kid, and he
okay,
stopped. He went to lentils, and then that stopped, and then he never went back to that type of grain, right? So it was interesting to me to hear that some farmers are actually growing some peas, right? Is that mainly due to that big pea plant that they built out in Portage, or?
I would think that would have something to do with it. I know certainly out west Alberta, that's always a big part of anyone's rotation. Canola, wheat, peas, and barley too, depending on where you're located. But yeah, and the advancements that you see in genetics and in farming practices and equipment. I mean, it's amazing, right? I mean, they've had autonomous driving combines for years now. They might not be going 90 down the highway like a Google car would be, but you know what? Those kinds of GPS type of technology have been there for years, and the seed technology is amazing. And the one area that often comes up too is self-admittedly that a lot of farmers say is that the financial technology being, how do we, we've grown this great crop and we've got big revenues out there. How do we manage that? And diversifying across different crops too is a big part of why I think we're seeing different crops, like you say, peas come up, or lentils, or whatever. So but that pea plant is going to help. I mean, I drove by there maybe a couple of weeks ago, and it's quite the impressive operation. So
Oh,
I
yeah,
think
it's
that's great
crazy.
for the prairies.
Yeah. Well, you have Simplot and the pea plant right there, and it's a city just between those two buildings,
Yeah,
right? So
yeah,
it's yeah, I know. I mean, that was great for the town of Portage. But yeah, just very interesting to see, farmers starting to really diversify what they're growing. And the farmers I talked to that did peas were very happy last year with it. So, well, they had a great year for the growing, right? They had a wet season, and so I'm expecting to see more of those type of things coming up here and there, kind of thing. So,
yeah.
um, so let me ask you, so we go back to the movement in grain. So as the grain prices are going up, um, what are you busy doing to capture that opportunity? Are you, um, yeah,
Yeah, so, and that's, and definitely that, even going back a year now, or a couple of years, as prices were going up again. First you had COVID, and then you had the drought, and then you had the invasion last year, and it was pushing prices up until basically till June. So there were ways, because people were hesitant to sell their grain, because they thought it was going to go higher, and sure enough it did continue. So there are financial tools that you can use to replace your physical sales with essentially like paper or financial contracts that allow you to capture that upside, so you can be comfortable making a sale, because you either need it to generate some cash flow or to clear your bins, whatever it might be, but at least you can continue to capture the upside. And Now, since the summertime, as prices have been drifting lower, you have to shift and adjust as the markets move. And I think now the focus is going to be more so that prices, I hope I'm wrong, but that they continue to drift lower. And doesn't mean they're going to, nothing goes one way. Well, rarely does it just go one way. But now is the idea of, look, we might not get back to those high prices that we saw. And in fact, history suggests that we won't. Doesn't mean we can't go up, $100 a ton or, $2-3 a bushel on some things. But, now is the idea you got to put on the marketing cap of looking at, okay, our risk is to the downside. How do we minimize that downside, but still capture some of the upside? So again, there's tools, financial tools out there that allow you to, protect your downside, let you sleep better at night, but also at the same time give you the upside. And I think what's been very important in this environment is these tools also allow you to manage some of your delivery risks, because anytime you use options or futures or puts or calls, you're not committing any grain. You don't have to promise your production into those contracts. And we did see a couple of years ago where there was a lot of buyout situations where farmers made commitments to sell their grain at really good prices, but then prices got better and there was a lot of, the drought and production issues and they couldn't fill their contracts. And there was some pretty steep penalties to buy that back. So the idea of being able to also market your grain and capture a high price without having to lock in and commit your grain for delivery is a very valuable tool, because then you're managing not just price risk, but that production risk as well.
Yeah, well, and I mean, you do this for a living, right? Do you know a lot of farmers who use these various tools themselves and, kind of do it yourself kind of
Yeah, there are
tools,
some, I
right?
think. Sorry, go ahead, Ray.
No, I'm just wondering, like, for myself, I would be just calling you and going, okay, Dave, what do we do with this year with the my sales and stuff like that? And I would definitely come see you quicker, right? But I have my clients, that have quite a few clients that like to buy their own stocks and do this
Right.
various other stuff, right? So you know, I guess what level of complexity is it for somebody to understand and be efficient with the tools that they're out there,
Well, I think yeah, I mean, I've been doing it for many years. And I think part of it is you don't have to become expert at it, because, just like, I couldn't go and I couldn't run a farm, right? It's just not my background and area of expertise. I've been dealing with farmers for decades now, but to be able to have that specific expertise, you're right, you do need to focus in on it. And a lot of it is combining what I do with what farmers are already doing in terms of marketing their grain and making decisions on, storage, delivery time frames, when I should be looking at that, maybe even some cropping decisions, right? If they got a really big wheat year coming up, maybe you want to be a little bit extra cautious and have some extra strategies in place to manage the fact that maybe half your acres are in wheat this year for various agronomic reasons. So those are all part of the discussion, and they usually come looking for guidance in that area, just like they would, going to other other parts of running a farm, right? There's a lot of moving parts there. So you do want to zero in and focus in and work with someone who can really help you in that area.
So let's hypothetical, let's pretend that the war ends with Russia and Ukraine and everybody's getting, back to their peace-loving ways.
Mm-hmm.
Um, what happens to grain prices? I know it's tough questions. I'm just,
Yeah.
but I'm always interested to hear what different people have to say about that.
Yeah. And well, we've certainly been drifting lower, and there are some commodities that have already gotten back to where they were prior to the invasion. But I think in certain markets, like perhaps especially wheat might be one of them, because that is also where a lot of it is grown. But if that's the case, if that does resolve itself, and I would say that would probably take a little bit of that worrying out of the market, and
Mhm.
perhaps that hoarding and that buying because of what if
Yeah,
comes
right.
out. So
Mm,
that
yeah,
would bring it down a little bit too, I would say.
yeah. So just things I guess to watch out for and think be considerate. And what I'm hearing is it's a bit more difficult as the markets go up, your prices and fertilizer go up, and then you get that 1 year, then prices are going back the other way, and you're paying last year's price. You go back
Right.
to your quote, right? It's probably, it's a difficult time for a farm, I would imagine, when you're trying to make those decisions. And
Yeah.
you
Yeah, you're right. And fertilizer prices have been coming down recently. I mean, every week it seems like they're inching lower and lower and lower, which is great. But, a lot of the positioning has been, okay, let's make sure we at least hedge or sell and protect enough of our grain prices to cover off, let's say our fertilizer costs. So at least we've got that covered in case things really drop. So yeah, you got to be mindful of the downside and whether or
know.
not,
Well, let's look
the
at something like that, because I mean, like, you gave me a really interesting chart, and like, to me, I love charts, and
yeah,
they
me
they,
too.
they they speak a million words to me, and I just see a lot of consistency through these kind of charts and whatnot. And yeah, what are your comments on the long-term pricing on, like, from 1970, which was, yeah, that's a long time ago, right? So
Yeah. So this year we're looking at about 50 years, and this is just an index that I've created of the four main crops, at least the ones that have got futures contracts that are associated with them. Wheat, corn, soybeans, and oats. And if the chart, I wish I had a longer chart that showed it going back, prior to the 70s, because that would have shown the last big run up where you had kind of an inflationary period like we might be in now, where you had um, some big crop failures in Russia, and you had the great Russian grain robbery where they went around the world buying up grain without anyone really knowing about it. Then you had, some Middle East crisis, Iranian Revolution. You had wars in the Middle East, and the oil price shock, where oil prices went from what, like, I don't know, like, was it like 30 to or $3 to 30 or something? Like, that's a dramatic move, and it pushed those prices up to the level where, as you can see on the chart there at the beginning of the chart, throughout the 70s and into the 80s, those grain prices jumped up dramatically, and they never went back to those low prices again, right? Prior to where they show coming up there in 1970.
mhm.
And we kind of had a range of prices there that basically held for 30, 40 years up until, the 2000s. And then we had another push higher, and now we're in this era too, where are we at a new? Are we going to stay in this level where we've been in since kind of 2008, kind of right after the last financial crisis? And what's interesting here is you can see on the red circles there, there's been, let's call it about a dozen major price spikes in commodities over the past 50 years. And except for maybe the one there, 2008, they all tend to drift their way back down to where they began. So that puts us in an interesting situation now. Are we at a new level here? And this is these current prices that we see. Is that going to be sort of a floor price with opportunity
Like
to
a
go higher
like
or not?
plateaus, I guess, right? Like, yeah.
Yeah. Yeah. And are we hitting that ceiling? Are we hitting that plateau right now? Or could we drop down again and we drop down to where we were, as we saw, like, 2015 to 2020 were on the chart. They were hovering around that, the index level of 400. So do we go back down there? Or do we stay up at these lofty levels? That's the key question. Um,
Well, I think, I mean, with inflation, I mean, like I said, like you said, like, just gas prices alone, right, would raise any kind of cost of running commodities, right? And, so high commodity as oil, potentially makes it more difficult for the consumers, right? Because you're always paying more
oh yeah.
regardless of, I mean, the price has come down, but price of oil is going back up, like it's funny, we all forget where price of oil was, or the gas was, at even a year ago. Um, I didn't check, but I think it was closer to $1 when,
Yeah.
you know, and I just, people go, oh, wow, at least gas is better price. And I'm like, wow, no, like, so gas is really still expensive, isn't it?
Yeah. And I know diesel prices have come down, but it still is pricey. And I guess that's where all these different commodities work together, right? And how they feed their way into more of an inflationary environment. And I think the big commodity to watch is oil. Um, because it drives so many things from petrochemicals to paints to manufacturing to, you know, ethanol and the fuel substitutes with corn and biofuels. So I think corn is has a lot of influence by what's happening in fuel usage, and so crude oil is an important one to keep an eye on because it affects all the others. It really does, and
there's a lot of generators powering the charge stations around the country as well that take up.
Oh, really?
Yeah.
Isn't that
Oh,
something, right?
well, I'm I like to follow both sides quite closely. I just and oil and gas is it becomes now you're driving in a few years driving a gas powered vehicle would be more of a they're going to frown upon it, right? You're going to
Right.
be cast out if you're still driving a gas vehicle, right?
Yeah. Yeah.
Um, so I mean, gas has to come down at one point or another, right? Like, is that, or am I, or is it going to go up more because there's going to be less people using it? So
Yeah. That's I mean, the one, and that's an interesting point because I mean, there can be a lot of supply that's brought on stream. Maybe not quickly, right? You can't just turn the taps on. Maybe Saudi Arabia can. There are some countries that have got some excess supply potential, but it's a very managed commodity as well in terms of who's going to produce it and in what quantities. But um, you think back again, you look at the chart, what happened in the 70s, a lot of that was driven by oil prices going up, I mean, more or less tenfold. So if you want to equate that in what we saw, like if before the Russian invasion, oil was $50, a rough equivalent would be oil would be $500 a barrel. If we want to try and pretend to think what it was like in the 70s when prices went up so dramatically, and that had a really big impact, obviously. And by contrast, if we've gone from 50 to 120 down to 75, that's not all that big in comparison. So I guess at the end of the day, where oil prices go will always have that impact. And yeah, maybe we're going to be surprised because the markets tend to do that, right? They tend to surprise a lot of people a lot of the time. Maybe oil prices, instead of going up, maybe they'll go back down to 50 again, and that's
yeah,
never say never.
yeah, it's too bad we don't have a crystal ball, right? It'd be a lot easier to know, right?
If only, if you find one, Ray, let me know.
I will. So, um, so lastly, I just, I mean, the world's changed a lot over the last, 3 years. It's just literally there's I can't believe we're locked down, and when the war hit, I had to check many various sites to make sure it wasn't fake news. Like, I'm hoping for a little bit more of not as many of those type of events and whatnot. Um, but I mean, what I've been hearing a lot is these days is that, yeah, like we're having a hard time feeding the world, right? And so for price of food and stuff like that, if you look at the basic supply and demand, you look at China and countries, they influence prices and then how much they use and whatnot.
Mhm.
How do you look at countries as well, I guess, when, an activity when you're trying to assess pricing?
Yeah, and I do look around the world. Unfortunately, there are a lot of commodity futures markets that trade around the world, and one of them was, there is a major natural gas terminal center in the Netherlands, and there's futures contracts that are associated with that. And it was interesting, right at the time when everyone was talking about, like in Britain, when people were talking about, not having a shower because they wanted to conserve heat for their water, or they would go into the office early to shower at work, or to cook their food in the office because they didn't want to pay for it at home. But that was right around the time when a lot of those natural gas prices peaked, and since then they've absolutely plummeted, especially in Europe. They're down like 70%. So looking at what's happens around the world is important, because Canada is, I mean, as much as it's a big country and we love our country, it's pretty small, and you know, a smaller player in the grand scheme of things. And you mentioned China, and that's an extremely important one because they are big buyers. Their demographics may have some issues longer term, but in the shorter term here, I do follow the futures markets that are traded on the various Chinese exchanges because everyone talks about China buying and buying and buying and what's happening there. So I look at what's happening down in their backyard, and in many cases, it's not as extreme as you think. Like their prices aren't really going through the roof there. Like they've got corn and soybean and wheat and even rapeseed contracts. So I look at that. So you hear something on the news, and I want to go right to the source. What is the price doing? So that's how I kind of keep an eye on different countries around the world, Ray, is by looking at the markets from around the world, so I can get a better sense of what might happen in our own backyard.
Yeah. So, oh, it definitely has been years of change and whatnot. So we're getting to the end of this, and I'm going to throw a little curveball to you because I always like to do that,
Okay.
and there's a lot of different things we've been seeing and talking about, and one of them has been artificial intelligence, and the role it's going to start playing in and even my world or the farming world in a lot of different ways. Um, how on your side, when it comes to commodities and that sort of thing, is there any talk about using artificial intelligence in commodities and how you in your tools and whatnot?
Oh, I think there's probably been funds and hedge funds, and Wall Street has been using artificial intelligence and billions of dollars worth of computing powers for years now, and even in the investment side with stocks. But you know what? There's always going to be a Bitcoin, right? There's always going to be oil going to negative $40 a barrel. Can you believe that? Negative 40. They would pay you to take their oil from them. There's always going to be instances of, what were some of those companies that went up? I can't think of it right now, but like throughout the COVID situation, it had so much attention. But computers run a lot of those trading systems, and you know what? There's been a lot of bubbles as well. So, I mean, I think that computers and AI can help in your decision making, but when you deal with something as changing and unique and different as human psychology, I still don't think there's a better computer out there than the one right up here. But it's going to have an influence. But I think good human strategies and a team of human brains is key at the end of the day.
Well, I mean, that's so true. And the thing is that, even if we, go back 20, 30, 40 years, I mean, you needed a team, but I didn't have to be so elaborate, right? But nowadays with, the sizes of farms, like you had mentioned, right? Farms went from, let's have a lot of kids and make sure we can keep the farm going to, hey, we need a lot of capital here, right?
Right.
And it's become more of a very, definitely more of a business entrepreneurial type of industry more than before, right?
Yeah.
So yeah, I think it's as long as you can find those right people, and we that really kind of try to go that extra for people, and if you have that team, you'll be that much more financially successful. There's no stats, no thesis or anything written about it, but we all know as advisors that anybody who uses individuals like yourselves end up with more wealth at the end of the day, and it's we are good at what we do, but we're able to keep clients on the tracks, right? We're able
Right.
to keep them focused on what they should be focused on, and really, I mean, that's what we should be here, right? We all kind of do one or two things extremely well, and some people it's accounting, and some other